Back with Talking Point and Castrol India as the stock in focus. Soft today, the company released the June quarter results and profits were flat, just a 3% uptick. Revenue is about 5%, and in line with consensus estimates, by the way. And maybe that is the bane of companies. If they're just meeting estimates, then the street doesn't seem to be liking that too much. You need to show growth, which is better than what is estimated. Let's ask how difficult it is to do that in the business that they are in, which is Castrol. Sandeep Sangwan, Managing Director of Castrol India, joins us right now on the show. Mr. Sangwan, good having you. Thanks for joining in. This is Neeraj here. Good morning to you. In line with estimates, but is this in line with your estimates, or would you have hoped to do a bit better than the revenue numbers that you've posted?
So, Neeraj, good morning, first of all, to our viewers also, and thanks for having me on your channel. I think we're really happy and satisfied with the results that we've seen. And the reason I say that is we've had a 5% top line growth, okay? The profit PBT is about 3% higher on the back of increased investments in marketing spends. We've increased our spends by about 22% in the second quarter. And brand is hugely important to us. And in the second quarter, we also launched our new campaign with Shah Rukh Khan on Castrol EDGE, which is our globally top performance product in the cars portfolio, because in the next decade, we see a huge growth coming in the cars segment. So overall, for a business that used to get a legacy-wise, if I go back 10 years or so, a growth of about 2-3%, and we're able to shift that to a 5-6% growth profile. And I think we're moving in the right direction while maintaining our margins at about 23% EBITDA. And we've always said we'll maintain our margins at 22 to 25%. On top, we've declared a interim dividend of 3.5%, which is higher than last year. Last year, interim dividend was 3%. So that should be good for our shareholders also. So overall, I think we're moving in the right direction.
Well, you've maintained a bullish outlook on India by and large, considering where we are on penetration and the fact that we will not be an EV takes it all country. I would love to understand, Mr. Sangwan, what are the broad numbers that we are working with when we talk about you building out this brand building, distribution network widening exercises and reaching some contribution from all of this to both volume as well as market share expansion?
Yeah. So let me lay out a broad picture
Sure.
for you. The core business continues to be strong because lubricants as a category will continue growing at about 4-5%. Our intent is to grow a few points ahead of the market. Okay. And there are three vectors that we focus on. The first is our investments in brand innovation technology. Okay. Like I mentioned that we launched Castrol EDGE, which has a full portfolio of performance lubricants for cars, for European OEMs, for SUVs, for hybrids. So those are the kind of innovations we'll continue bringing to the market. The second vector, as you rightly said, is our reach expansion. Okay, so as I've shared in public forums, we are focused on continuing to expand distribution, and there's a lot of growth to come in rural India. We've added this year another 2,000 outlets, so we reach about 35,000 outlets in rural India now. We cover about 29,000 what we call bike points, which are two-wheeler workshops. Many of them are branded Castrol. And then we have about another, I think, 8,000 car workshops. Out of those, there's about 540 outlets which are branded Castrol Auto Service. So overall, we cover about 135,000 outlets, plus giving us the largest scale in the country as a lubricant player. And we continue building on that. That's not the end point for us. So the second vector of growth is expansion. And the third vector of growth is diversification into new areas. We have a suite of products for electric vehicles under the brand Castrol ON. Okay, whether it is lubricants, coolants. When I say lubricants, it's greases, coolants, transmission fluids. The second is last year we launched Castrol Auto Care, a range of auto care products which we are expanding. Last month we added a shiner sponge to that portfolio, and these products are available in like 45,000 plus outlets now. And then we kind of working in some other areas from a diversification plays, which are called out as global diversification plays, with data center, thermal management being one of them. So I think those are the three pillars of growth for us as far as India is concerned, and that's why we are very positive on India growth story.
Got it. Mr. Sangwan, so with the volume growth numbers that exist right now, and you would beat the
Yeah.
market maybe by 1% or 2, what
Yeah.
about the non-volume pitch part of the business? I mean, uh, operational efficiencies, is it possible to improve that a little bit? Would you believe that it is possible for a company of your brand to maybe clock in slightly better operational metrics over a period of the next 3, 4, 5 years? Is it even possible to do that? Because there's so much of dependence on what the input cost would be as well.
So absolutely, I think in any business, Neeraj, as a fundamental belief I have, while you have to look at top line growth, you always have to continue looking at your cost as well. Okay, so I call it the jaw, fine. And if you don't focus on cost as an organization, you're not doing justice to the shareholders. So there is an opportunity on finding operational efficiencies. We keep looking at our formulation efficiencies, product efficiencies, and we have various programs, whether it is Salesforce productivity, whether it is our product cost structures, whether it is our logistics. And our intent is to continue finding efficiencies and cost also, because we've said we want to continue while to get more volume, we are playing in larger segments of the market, both on the premium end and at the mass end, but we have to keep our EBITDA margins between 22 to 25%, and some of that will come through cost efficiencies.
Okay, but it will be slow and gradual building out over a period of time. I don't think there'll be a step up possibility out here, right?
I think step up possibility, we've already shifted our volume growth profile versus what we used to see. And I think we're getting much more confident on in terms of driving top line and bottom line growth, not only through pricing, but and margins. But as you rightly said, I think it's a journey. It's taken a few years for us to make that shift, and we hope to continue making that shift as we go forward.
Okay, last question really on the size of the market over the next 5 years and your share within that. I mean, you're presumably the unequivocal leader, but from where you are, can you be higher than that, or is that just literally not possible? Just trying to understand.
No, the aspiration is always to increase market share. Okay, that's what we are in
So what
business
is it
for.
currently? Where will you be?
Yeah, I think if I take our reported shares as reported by Nielsen, okay, in the retail automotive market, that's where our focus is, and that's what we measure. I think we are in the low 20s as a share is concerned, if I put all the segments together. And our hope is that we continue investing on our brands, continue building reach and distribution to grow our market share. Now, how much we grow it by is time will tell.
Okay, so maybe we will talk about it quarter after quarter to just try and understand, or maybe year after year, because I don't think it's a quarterly phenomenon. Okay, fair call. It was great talking to you today. Unfortunately, we are out of time on the show, so I'll have to leave it at that, Mr. Sangwan. But it was great to get some insights from you on this, and we look forward to more conversations as you wrap up Q2 or the half year as the case. Or actually, no, this is the half year as you wrap up Q3 in your case. Yeah, as you wrap up Q3 in your case. But thanks for joining in today.
Thanks, Neeraj. Look forward to that.
Yep, likewise. Well, that's the view from Castrol. When we are almost at the end of the show, just very quickly mark what's happening in the indices, because we are again trying to make our way to 24,950 odd. From that level, we've seen a bit of a slip down yet again, always. Today, the Bank Nifty is not participating. It's the IT index which is participating, because you have the Nifty IT, which is up about 0.6%. So that is the one which is taking the index higher in trade. And I wonder what's quite moving within that. So just get the Nifty IT constituents persistent on that. CLSA upgrade is up, but it's not just that. There is strength in TCS, Wipro, Emphasis amongst others. So that's the bucket and coterie of stocks which is principally responsible for the market doing what it is doing. I wonder if Suven Life is still, or Suven Pharma is still one of the key movers at the broader end of the spectrum, because it's up about 11 or 12%. When we started talking point, it's Suven Pharma should be up about 11%, yes. So that's on very good volumes, by the way, is up about 3%. And Bombay Stock Exchange, amongst others, was very active. I reckon that would probably still be the case. Okay, 7.5% now. On that note, we wrap it up on this leg of Talking Point. Thanks so much for tuning in.